Hello everyone, it's Mozart here. The first video of 2025. Happy New Year to everyone. And Bitcoin in general, and altcoin in general, and all crypto has grown. It's also, so to speak, given us all a little New Year's cheer. The rise started on December 30th. Well, if you consider it that way, that's the very bottom. I had a limit, on the additional collection of 5/8. Yes, that beautiful number. A 25% chance of breaking the $90,000 mark. I waited for a rise, as the correction seemed sufficient. And with a 75% probability, I was holding off for a rise from the current reversal, because according to the blockchain and the indicators in the blockchain, that correction was quite sufficient. So, that's pretty much how it's gone so far. Bitcoin, this is the 4-hour chart, not the daily one. Right now, we're at the last frontier here, which the bears are still holding. Here's the resistance level. And this is a serious resistance level for the bears. If the bulls can break through it, then in principle it is possible to go up to the height of this entire trade. I'll just take the maximum straight away to set a moment. Yes, that's exactly a breakout. Update this high. And here we can start drawing something a bit more interesting. Or the next sideways movement, because I'm not expecting that kind of growth anymore. That's the kind of wave of growth we're seeing. Here, it's likely we'll just see some sideways movements with a bit of a shift. Or we could head into a more serious correction, breaking through the $90,000 mark and dropping down to around $87,000 or $86,000, somewhere in that region. But I still stand by my forecast that there's a higher probability we'll see this high updated before we encounter a more significant correction. After that, we could drop by about 20% to 25% or so. We're already looking at setting up these sweeping corrections. So right now, on the 4-hour chart, the price is hanging above all the moving averages. That's good. We've traded below them, and it looks a bit like a false breakout. And if we end up lingering here, plus there's also the monthly R3 pivot, then everything will be alright. We need to consolidate here for a bit, maybe move around some more, and then take off from there. We need to close all these gaps, of which there are still more than enough even on the 4-hour chart. $101,500, $104,000, and the third is $106,000. For now, it looks like it can. It might manage to hold here. It might not be easy. The altcoins are improving, but for now, it looks like it's set to hold, to succeed. The altcoins look better. Even on the 4-hour chart, they look better. Total 3. So, we've been here longer and have moved above 200. The 200 moving average is represented by this white line. In this case, it's at 204-hour candles. We've also consolidated and then moved upwards. On top of that, on the weekly chart for Total 3, the altcoins are looking better than Bitcoin as well. If Bitcoin hasn't yet managed to hold above its peak candle, well, the weekly candle from December 23rd that started it all, then the altcoins have already done that. This is the very candle. We closed above this high last week. It's a really good sign when we reverse through a pattern like this. In such conditions, the price either goes straight up with a new high above this peak, or it does a retest of some additional support line and heads upwards. So, last week closed very well for the altcoins, and that's a big plus. So, this leaves a wide window of opportunity for growth, at least until March. So, basically, according to my basic forecast scenario, this alt season, yes, there was a harsh correction, but for now, it's still an alt season. It will last at least until spring, mid-spring at the latest, maybe until the start of summer this year, 2025. The same can be said about dominance. but from the opposite side. Mirrored, proportionally. Correction. They tried to break through the 200 moving average. This is the 4-hour chart. They couldn't manage it and fell below it. Right now, we're testing it from the bottom up. That's a good sign too. A good sign. We don't rise above 58.5%, drop 50% to pattern height. 58.5 to 59%. Then most likely we will close all these holes and go lower and lower to the height of this figure. So, down by about 50%. A 50% drop is a reasonable decline, a sensible distribution in Bitcoin's dominance. Basically, this is one of the intermediate lines, which is also confirmed by the moving averages on the weekly time frame. So, we've tested the 50 moving average here. Now, if we hit 50%, it will be a spike for both the mobile moving average and an approach to the 200 moving average. So, this will essentially be the first touch of the 200-week moving average, a retest. Well, since October 23rd, more than a year. If we remember, the monthly candle by dominance is rare. The November one closed extremely bearish. This is a retest. And, essentially, everything will be swallowed by the candle and head towards the 50. That wouldn't be too bad. We're testing a fairly serious level, even if it's a mirror level, which is right here. Here it is. Here's the mirror. 50 to 51%. This is a reasonable decline. And here, you can start to close out a bit, take some profits, and leave a few crumbs on the positions. With the likelihood that it will go down here, with some probability. I don't know yet, I can't say. So, the 50-month moving average is currently hovering around the 50% mark. That was about the chart. So, what's the conclusion here? The altcoins look strong. Plus, by the way, we've closed a double bottom on the daily for the altcoin. This is already the daily chart. If you look at the targets along with the shadows for the altcoin, it's a clear overreach. That's at $1.15 trillion. Before that, the high was 1.13. That's a good figure. As for Bitcoin, that hasn't been closed yet. So, for the altcoin, the likelihood of a further upward move has increased significantly compared to 1 or 2 weeks ago. Buy the Bitcoin. Just a little bit more to break through here, and technically we can head upwards with a greater degree of probability. I'll repeat, it's still likely to do so. Maybe there'll be another retest in this range, whatever it may be, even at the mark of $97,000. It could still come down here somehow, even a bit lower, maybe 96, and then still go up. For now, that's my basic scenario. Next, that was about the technicals. So, overall, leading up to Trump's inauguration, everything is looking upwards. We've managed to get back above the 50-day moving average, that yellow line, and both Bitcoin and the altcoins are doing well, with the altcoins looking stronger largely due to the falling dominance. Now, interestingly, regarding funding for Bitcoin, after the drop to zero, it even went into negative territory during the day, and we've come back to some sort of average, that is 0, 0.5, 0 to 1, 0.01% standard minimum long funding. So, we've returned to the optimal zone, and the market isn't overly long. We're currently in the optimal zone. So, basically, we can expect another similar spike like the one we had here. November-December. There can be several of these spikes. Even in 2024, there were 3 of them. 1. Normalization. 2. Normalization. 3. That's it, and we're dropping. So far, there's only been 1. You'll see for yourself. The calculation for 2021 is based on the same criteria. 1 normalization, 2 normalization, 3 normalization, 4 normalization, 5 normalization. Right, let's move on to the bear market. Next. So far, there's only been 1. We can expect at least a second spike. Next. How much are long-term Bitcoin holders spending, and how many days are we looking at within a 15-day window? So, the day before yesterday and yesterday, we nearly dropped to the nominal value, so to speak, which is the so-called neutral zone around the halfway mark. So, roughly 8 out of 15 days they're selling off. This is already a sort of neutral value, which on regular markets acts as a support point. This happened in 2024. After the Bitcoin ETF was approved, it was already in February. And in 2021, these support levels were in play. I mean, even before that. Next, we have the realized profit to loss with a 2-week smoothing. We've moved below the euphoria zone, under 90% profit on average over 2 weeks, and we're currently below that, under 90% profit on average for 2 weeks, and we are now under it. That is, the minimum target has been met. The minimum target for cooling this movement has been achieved. Next, the number of stablecoins on exchanges. It's not so much that it's falling, it's the change over the last 30 days. These are the histograms, the green bars. So, over the last 30 days, it's decreasing. Stablecoins aren't being added to the exchange as much, to put it simply. Not at such a high speed as before. Market corrected tethers. Mid-December is in correction. It's clear that they aren't as necessary now as they were in November after Trump's victory, but the actual value of Tether on exchanges keeps rising. This green line hardly drops at all. At most, it levels off, but mainly it's increasing, so it keeps on growing. And here, by the way, I'll remove this, and I'll take this off too. This is divergence. It can be a signal when we see stablecoins on the exchange increasing while the price is falling. Divergence, a turning point. If we look at how this signal played out in the past, it was exactly the same. Absolutely the same. So, for example, in January 2024, after the approval of the Bitcoin ETF, stablecoins aren't falling, but the price is dropping. Divergence, we're moving upwards. Next, for example, there can be the opposite situation. July-August 2024. The price is rising, the number of stablecoins on the exchange is falling, we're seeing divergence and heading down. 2021, the same thing. The price has gone up. Right, sorry, I showed the wrong thing. The price has dropped, the number of stablecoins has increased, and the divergence is growing. Next. Here's a good example. A classic, powerful example. The March crash, coronavirus. The price has dropped, and the number of stablecoins has increased significantly. Divergence, a massive rise. It's all the same here. Next. The chart shows the average purchase price for short-term holders who keep their bitcoins on balance for up to 1 month. 19 days loss, price. It's day 19 today. It was 18 yesterday. They've moved into this loss zone today with an average purchase price of 99,400. And today, Bitcoin was nearly at 100. It was practically 99,900, right? And today, Bitcoin was nearly at 100. It was practically 99,900. Yeah. So today, I reckon they might just break out of their loss zone. On average, the correction for short-term holders, in terms of their losses during bull markets, has always ended around these values. So, the correction from January last year is actually identical. Here, it was at a peak for 20 days. Then on day 21, they recovered into profit. Bull Run 2020-21. There were hardly any significant corrections here in 2021. Everyone got through it in 2020, and in 2021, there was one instance of 13 days. It was long here. Next. They had 18 days, and here it was long, 26 days, then 18 days. It was long here, 26 days, then they had 18 days, then another 18 days. Days. Basically, the current value of 18 days is already quite significant, enough really, and you don't need much more on bull markets. Much more. Yes, We can take into account that liquidity is quite loose at the moment, BlackRock is in the market, and the price isn't moving as actively as it used to, that's a fact. But nevertheless, according to the indicators, that's enough. Regarding the realized profit, specifically in relation to the total circulating supply of all Bitcoins, it has fallen to the unloading line. So, as you can see on the chart, there are three main lines. This red line represents euphoria, the line of just high profit, and this yellow one is the normalization line. So, this is generally considered a support point in all bull markets. Here's the chart from 2019, essentially. In 2019, that was a support level. Any of these lines can act as support. And it was like that in 2021. Next. Here, this line acted as a single support. There was one false spike here, and now we've reached the basic support line, the line of standard profit. The same goes if we look at the cycle before last. 1, 2, 3, 4. Everywhere, the lower or middle lines acted as support lines. That's it. Now we've reached the average profit line according to the system. That's about 0.5% of the total supply, the overall circulation of Bitcoin in the system. 0.5%. Overall, Bitcoin and Ethereum are not being withdrawn from exchanges as actively as they were, say, in early December or late November. However, yesterday it was around $117 million, whereas on January 1st, it was nearly $300 million. Bitcoin and Ethereum continue to go into deficit, and the overall momentum of realized profits and losses is also gradually recovering, currently sitting at about 40%. That's what's happening in the blockchain. That is, in general, for the blockchain, if you generalize all this, everything is calm, everything is calm. Bitcoin isn't overbought. Indicators show minimal relative profit with a green histogram. Stablecoins on exchanges are increasing slowly. With price indicator divergence, realized profit momentum is emerging. Further, the number of stablecoins on the exchange, although not at such a high rate, is still growing, and there we have a divergence between the price and the indicator. The momentum of realized profit is just starting to show signs of life. Basically, there aren't any serious obstacles for further upward movement. The only obstacles here could be the news this week, as the unemployment figures in relative terms will be released in America. These are important data, and if there are no negative surprises there, I think that by Trump's inauguration we will confidently be trading above 100. Nomination distributes altcoins. Altcoins recover from losses, and all the altcoins will recover from their losses since mid-December. In fact, they'll recover even before the inauguration. If, I repeat, there aren't any really unpleasant surprises regarding unemployment this week. But this week, there's an important report. It will directly influence the Fed's decision. How many times to cut and whether to cut the rate this year. That's it. Thank you all. I hope you found this overview useful. At the start of the year, these are my thoughts. Well, so far everything is going according to plan, just as I had intended. Where there's a long position, there was a long position, including Ethereum and Bitcoin. The probabilities are also playing out. If anything changes, I'll certainly let you know. That's it. Have a lovely evening. Once again, happy upcoming holiday on the 7th of January. And see you soon. This was Mozart signing off. Bye.